Well, let's go into these numbers. As I said, headline earnings per share down 19.5%, but revenue up 16.5%. So take us through the 6 months that was for the company, because there's quite a bit of improvement coming through from a revenue perspective compared to when we chatted at the full year period.
Alishia, I think there are a few positives now coming through in the construction industry. I think one could be saying that maybe we've reached the bottom and now we should be turning. Obviously, we can never be sure of that, but there are 3 things that indicate that to me. First of all, if you compare that profit to the most recent 6 months, not the first 6 months, but the second 6 months of last year, you'll find that profit slightly higher. So we're better than the most recent 6 months. Secondly, our revenue's gone up quite substantially. And thirdly, our order book is up very substantially. So I think that does give us a bit of hope that we're on the right track and that we're now heading upwards, or certainly have stopped the downward spiral the industry's been.
Let's drill down into that order book though, Mike, because I mean, yes, we've seen significant growth there. It stands currently at 21.1 billion rand compared to the 16.2 billion we saw in the June 2011 period, but there's a 23.6% decline in operating profit there, and that alluding to the fact that margin pressure is still a very big challenge for the company.
Yes, it's very competitive wherever we are in Australia and South Africa. Hopefully the South African market is going to improve now because of the plans of the government to increase infrastructure spend. If this economy has to grow, it needs a certain amount of GDFI spend, and that's our space. So hopefully, with the budget coming up, Minister Gordon will explain how the money is going to be obtained for that infrastructure spend. But it's not only infrastructure with poverty alleviation; it's now infrastructure with roads, railway lines to get the economy going. So I think from that point of view, it looks positive. We just hope the money will come for those projects. Yeah. And then Australia, of course, it's a very tough market there, and I think we're in the right areas, and I'm confident that the overall demand for Australia's products and the very efficient way they get them out of the ground and off to China will continue for another good 5-10 years. So we're very pleased we're in that space.
Before we hone in on your Australian operations, let's bring it back to South Africa for a bit, because we've heard the promise of infrastructure spend for the longest time, and we've heard at the same time construction companies complaining of that not coming to the table and it not actually filtering through. And with that, lots of reliance coming through so far on private sector activity. It's certainly what's reflected in your results today. So where are your confidence levels sitting right now?
We have to really rely on what we've got. We can't rely on politicians' statements, but they certainly give us hope. I think of that order book of 21 billion, there's only 5 billion that's private sector spend. The rest is all, public sector spend. The rest is all private sector. So we've learned to live with this situation, but certainly it's not when that infrastructure spend comes, we're ready for it, and our preference obviously is to work in South Africa. Yeah. We don't like being pushed out of South Africa, but that's where the work is. We have to go, and Africa's been very successful for us, and Australia has, although the margins there are tight. And certainly when the infrastructure spend comes here, we'll be wanting to push that public sector part of the order book way up.
Of course, we're looking at then about 15 billion coming through from private sector work. Yes. Right now. What does that say to you in terms of the health of the economy as a whole in South Africa from a private sector perspective?
I think the private sector in South Africa is fantastic. I think the amount of building work, you see our revenues have gone up in the building side of things, and there's still a lot of very nice projects coming through on the building side in all areas, and even in the Cape there's been 2 big projects there, and in Natal, KwaZulu-Natal, Durban and the Johannesburg area. So I think the private sector really comes to the party, and they really are very good, and we just hope that the government will come to the party as well, because that's where the real GDFI spend is, and that's where the economy will grow from. We need roads and railway lines and all those good things, and harbours, And, you know, from what we hear, it's going to happen.
Well, certainly when it comes to your own CapEx spend, we've got to date 246 million being used against an authorised budget of 437 million, a lot of it being dedicated towards Australia. Now, what's the appeal of the Australian market? Because we were chatting off air about South African markets trying to make it, or South African companies trying to make it in Australia. And certainly when we're looking at the retail segment of, you know, of the economy not faring too well.
Yeah, it's difficult to say why they haven't, but I think generally companies do battle in Australia because it's different, it's another country, it seems very similar to ourselves, but there are quite a few fundamental differences, and it's very competitive. You know, it's a great country from that point of view. You know, you have to be on top of your game, you have to be firing on all cylinders to be able to make it there, and then the margins are low. We think we've got a nice position now in the resources sector in Western Australia, where there's going to be a big spend, and there is a big spend from Rio Tinto, Billiton's, Fortescue, and we think we're well placed there. And on the other side of the country, there's been all that flood damage, which has really helped our business on the road side in Queensland, where there's some very nice contracts coming out. But you know, the general building market in Sydney, Brisbane, Melbourne is very tough going, but we've got good guys there, and we're getting our fair share, and we'll just have to keep going at it.
Well, as you say, it's a competitive landscape that's certainly very challenging. When it comes to the African market, are you also still focusing on private sector work primarily?
Yes, our main focus is on mining infrastructure for the mines, which is obviously pretty buoyant with the resource position worldwide, and we have very good relationships with the mining companies. We've performed for them before, and they therefore want us to continue with contracts. We've got very nice contracts in Sierra Leone, Guinea, Ghana, all pretty tough areas to work in, but you know, our guys, we've all been together for 20 years, so that logistics really comes to the fore when we can, as a team, make sure we get the right people and plant onto these jobs, perform well, client likes us, gives us the next section. And that's, you know, in other areas such as Mozambique, DRC, Botswana, those are more our traditional areas of working, which are also pretty buoyant.
So when you're looking at the geographical split of your order book, it's now 61% foreign and 39% local. Is that something that we're expecting to see shift as more government spend locally in South Africa comes on board?
I think those African and Australian markets are so strong. I think from a turnover point of view, it's not going to shift too much, but I think it will increase. So the South Africa content will increase, you know, maybe a few percentage points, but in volume it will increase. So we're going to be pushing hard on all those three areas.
Certainly pushing hard from a geographical perspective when it comes to product offering as well. WBHO pursuing a number of opportunities within the renewable energy sector, and reading through commentary here, the company saying it believes that it will materialize in the short term. What exactly are we looking at there?
These are the renewable energy requirements that Seckam have, and we're very positive about it, because Seckam and NERSA and everything that goes into a PPP project are all in place. So I think these projects will definitely come about, possibly as early as June. There's a number of them. We are involved in one at the moment, and they're very exciting projects. It's you know, either wind power or photovoltaic, or I forget the other one, but there's three main areas. We in the photovoltaic space, and they look relatively low risk. You can understand the project, and as an EPC contract, I think they're very attractive. And there's also quite a few other things. We're generally disappointed with the PPP in South Africa, as I'm sure you've heard. But hopefully more PPP projects will come through, and they will be adjudicated clearly and consistently by government. And that will also add a big shot in the arm to the construction industry.